Welcome back, Sam Degreen. It's been a while.
Yes, it has. Yes, it has. It's good to be
You
back. How are you?
good. Your company had a big merger, I understand.
Yep. And yeah, a merger. And then 2 weeks after that, or about a week after that, I got COVID. Yeah, I was in the hospital for 5 days. So my
Oh,
wife was stuck with the baby. They both had COVID. While I'm in the hospital. Yeah, it's just been a total bleep show, as they would say. But I'm
well,
back.
we're the COVID twins because I got diagnosed with the COVID yesterday.
Ooh. Did you go to CVS and get one of the swabs, or did you just do the
No, you
at-home
know what
test?
the sad part was is my car's in the shop
Okay.
and my truck, and I'm having a new oil pan put on and all this stuff, and they said I'm not going to get it back until today. So I'm here carless. So I did one of those mobile places. So my neighbors get to watch this guy show up with a mask on and a thing and carrying two,
They have a mobile service for COVID
like I'm
testing?
dead, It's like I'm walking in. I said, "Oh God,
It's
this
like
is
out of a
great."
dystopian movie.
Yeah, yeah,
Some
it's pretty wild.
it's
So
creepy.
you watch this little thing. It's like a pregnancy test, right? And he says, now if two lines show up, then you have COVID. If no lines show up, then you don't. It's looking pretty good, he said. And then I looked out, and I go, it ain't looking too good now, pal. I got
Yeah.
two lines. So, but
Oh,
it's a mild head cold right now. It's just more of an irritant. So, but hey, this is the virus of the unvaccinated, right? So
yeah. So, you
I
damned
won't
if you
go
do,
there.
damned if you don't.
I
It's
know.
just it's so ridiculous. At this point, I think this decade is going to be the well, that sucks decade.
Yeah,
It's just
yeah, that's right.
so many
We're not
things.
going to talk about it.
Yeah, just so many things out of your control. I mean, everything is out of your control.
Well,
Um,
there's been a lot that went down while you were. I mean, you were unavailable to us, but you were certainly working your butt off. But
yeah.
um, China, Evergrande, which for people that don't know is China's largest um, developer, and they were told to demolish a resort.
They had to
Now,
demolish 28 properties, I believe.
yeah, yeah, and they're saying, well, it's not meeting our standards or whatever. And it's kind of like,
Since when?
yeah. So I mean, you're supposed to demolish this thing. Didn't they look at the plans before they built it? But so anyway, they're really in deep, deep trouble. And these developers, real estate makes up 25% of China's GDP. I think real estate is 23% of our GDP.
Yeah, something like, yeah, I think that sounds about right.
And so my question is, because I know you guys really study global markets and keep a close eye on this stuff. So what do you think of this? Is this going to be contagious in the financial markets, or can we just go, it's China?
No, it stops at our borders.
Does it?
Yeah, it does. The BlackRock, $7 trillion in assets under management, had $400 million, which isn't a small sum, but relative to $7 trillion, they only had 400 million allocated to Evergrande or Evergrande. I don't know. I don't know which one it is, Evergrande or Evergrande, whatever. So even the largest asset manager in the world had very little exposure. And there's also been a large divestment from China, and this started happening pre Evergrande. I think that's the least of their worries, to be honest with you, because they keep promising the 6% growth rate, and I think this is going to be a bad decade for China. It's going to be just an awful decade uh, for China. But I think what we're seeing is the decline or the beginning of the end for the Communist Party there. You can't take away capitalism once you introduce it. You can't take away the punch bowl. The people got a taste of it, and you can't take it back. And when you have 25% of the economy, if you think about it, he probably made some pretty powerful enemies. I mean, a lot of people lost a lot of money in China. I mean, there was a big deal. That was the Lehman Brothers crisis.
So that collapse per se has already happened for them.
I think that's been in the works for a long time. Their just their household debt is 130% of GDP. So the amount of debt the average citizen has is so far above and beyond what is normal and what is healthy. This was bound to happen eventually, and everybody had trouble pricing this because everybody thought, well, the government's going to bail them out. The government's going to bail them out when you have a state-run economy and you have 25% of the economy in this one company. Nobody thinks they're going to fail. They're too big to fail. But
yeah, that was interesting to watch because at one point the government was telling the other developers that they needed to invest in Evergrande, which is like telling J.C. Penney's, you need to send some money over to Sears.
that would have worked out terribly for both of them.
Yeah,
and and it's kind of the same thing. It's once a state. The problem with state-owned enterprises, they become bloated bureaucracies, and that is their downfall. Always, there's no fear of death when you have the government behind you. So
yeah, they created a monster. You had this capitalistic movement over there, but then they, in the back of their mind, thought, well, they're still communists, so we can go ahead and trudge forward. If it doesn't work, we know they'll bail us out, right?
Exactly, and that's why the world had trouble pricing their credit and pricing, even evaluating it but the problem is you're Xi Jinping and all the communist leaders are stuck between, okay, we have a moral hazard, which is we can't get bailed out. That's not healthy for the economy. And do we let these people fail because they need to be delevered? So it's a damned if you do, damned if you don't type situation. But
so the first question we have is, will Arizona prices go down in real estate? But it doesn't sound like this will have any effect on our credit markets at all.
No. I think most of it's already been priced in. We had so little exposure to it. It's going to hurt China. I know, the old phrase is when China is,
sneezes, we catch a cold.
Yeah, or we catch COVID.
Okay.
Sorry, I'm still mad about getting COVID.
Yeah, so am I. I had plans this week. My son's coming over from California today, and I can't go see him.
Well, that's what I think is going to keep housing prices up. Is we have an influx of people that just keep coming in. They just keep coming in, and it's all California. It's all Californians, and yeah, some other out-of-state people. But
well, it's interesting because here's how money moves. I love this.
I love this site. You showed this to me. This is phenomenal.
And so when you look at Arizona right now, it's showing that 13.2 billion comes from California, and we have 5 billion from Illinois, so twice as much coming from California. And then it's all the other cold states: New York, Minnesota, Washington. We're losing a few, piddling out to Texas, Idaho, South Carolina, Tennessee, and Arkansas. But it's when you look on a national level. And I gave Toronto as an example the other day. There's 6.9 million people in Toronto, and they only have 2,900 homes for sale. Now, that's not California's fault.
No.
So we can't, as much as California's coming over and scooping up Arizona, this inventory problem is, it's almost global, but it's definitely U.S., Canada, and England, and Australia.
Well, that's what happened in the 2008 crisis. I think it was about 725,000 homes annually. There was about over 700,000 homes were not built as a result. So year after year, you have 700,000 less homes every year. Well, 10 years later, crap, you don't have anything. And so it's got to keep up. We got to start building more houses. We got to start.
Yeah, I did show a chart on a few videos ago that showed the population of baby boomers, and then behind it, the population of millennials. In other words, our kids, and showed building trends. And you can see that after 2008, there was nothing being built. And here comes this wave of millennials that reach their prime home buying age.
Yeah.
And there's nothing there. And it's not like there's a group of people being stingy and won't sell is that there's nothing for us to buy. So, I mean, one of the main catalysts right now for not being able to get a listing is because they go, well, I know I could sell my house for more money, but where am I going to go?
And a lot of people are moving out of state.
Yeah.
So they'll sell their house here. It's kind of an arbitrage in one market. You sell and you move to a cheaper market. We have a lot of people moving to Wyoming. Seems to be a very popular destination.
You couldn't drag me up there with a team of horses. It's just too windy and too cold. I like watching Yellowstone just like everybody else, Wyoming and Montana, but
it's beautiful in the pictures, and then you just kind of want to, oof. Yeah.
My wife and I went to Yellowstone, and it was just breathtaking. I loved it. Being photography is a hobby, I just went crazy. I don't even realize how much fun it was until I got back and looked at the pictures. But I love it up there. But we went up on one of the chairlifts up to the top of the hill, and we were up there in August. I was freezing.
Yeah, it's brutal. It's brutal there, and a lot of people are going to Florida. Florida seems to be, I don't know, just in my experience with clients, but again, that's God's waiting room. A lot of our clients are older, so
I haven't heard it put like that, but
yeah, they like to go to Florida.
So Florida is seeing $36 billion from New York. Now, remember, we saw $13 billion from California, but yeah, look what's happening to Florida. $23 billion from New Jersey. So every one of these are higher than what we're seeing as an influx from California. Of course, it's much bigger than we are, but people are leaving Florida to North Carolina, 1.5 billion. So
yeah, North Carolina's really taken off.
Yeah. So let's talk about the Fed's action. So we look at Ben Bernanke when the 2008 crisis comes. He starts quantitative easing, and he eventually starts talking in the future, saying, "Well, you might end up actually doing a thing called helicopter money, where you literally drop money out of helicopters. In other words, give direct stimulus," which we saw.
Yeah.
And so now you've got Chairman Powell. That is so you had Bernanke, then you had Yellen, now you got Powell. And he's saying, well, we're going to have to start pulling back. So the market's reacted a little bit, but then lately this week, they've reacted a lot. And interest rates.
Yeah. What were they today? They just came out. It was like 10% inflation, which is definitely playing a role.
Well, the rates kind of went up a little bit yesterday and then came back down. They were 3.65 and now they're 3.59 as a national average. So still a heck of a good rate, but there's, how hard do we think that Powell's going to have to pull back? I don't see him having to do what Volcker did in the late 70s that just shut everything down, but he's going to have to take the punch bowl away from the party. What do you think?
Yeah, we went off the gold standard in the Volcker days, and that was kind of one of the that was a whole separate issue. So when people are worried about the inflation of the 70s, I don't think you're going to see that. Today, though, I would not be surprised if we see inflation annually run about 5, and it's going to decline. But it's going to keep moving, and that's going to be a drag on the mortgage industry too. It was my understanding that 69% of or they expect a 69% decline in what's it called refinancing.
Oh, they're seeing it already. Yeah, the refinancing party's over. It says. Mortgage MBA says rate spike is closing the door on refinancing. So
yeah. Oh, it didn't just close, it slammed it.
And you can see it with lenders on Facebook having posts like, that was the cash cow. KCH1 says, after watching the hearing yesterday, QE sounds like it'll never stop. The market was enjoying it yesterday. Therein lies the problem. It's either going to stop slowly and soft landing like they hope, or it's going to be one of your kitchen pots clanging.
Yeah, usually. Okay, so the biggest fear is that the Fed overshoots it. and they have screwed this up before. The good news is I think it's going to be so incremental, and the supply chain issues I think really are at the heart of it. If Biden's got to get on the phone to these supply chain companies, and they got to get on the phone to the ports and everything, and just say, let's go, let's get these things moving. That's what I think is causing the inflation. I don't know. They're saying 4 rate hikes, 3 rate hikes. Again, it's still too hard to tell because of, you just have a totally broken supply chain. I think there's going to be 3 rate hikes, personally. I think that's what we see this year. I think 25 basis points probably at a time. I don't see it. I actually seen it being good for the economy. I see it being good for markets. I see it being right now, 7% of the S&P 500 companies are what are called zombie companies. And that is they're barely hanging on. They are just making enough money to pay their interest expenses on their debt. Those companies need to die. I hate to say it, but it's gonna be a good thing. Rates do need to rise. There's no doubt about that.
Well, and rates rise, and people are saying that it's going to really cause real estate to crash, and I don't see that. I do see a slowdown and an increase in inventory, but then you can kind of take a worst case scenario too and say, well, look, we've gone up 40% over 2 years.
Yeah.
And so if 2023 rates go up and you have a 10% decline in your value, you're still okay. Now, if you bought at the end of 2022, you had a 10% decline in value, but you're still sitting there with a 30-year fixed rate, ride it out. I mean, I've gone through that 3 times in my lifetime where I bought here and it went down. You just got to wait it out. And the only time that didn't work was in 2008. Now, I got out before that. I called it the silly season. But I think, yes, house prices will eventually come down. They always do.
Yeah.
How fast they come down, you can't predict it. But are you buying a house or are you buying a stock?
Oof. Personally?
Now, for investors, and one of the things that could happen, you look at all this iBuying traffic out there right now, and an iBuyer is just simply an institutional buyer.
Yeah.
So let's say Open Door and Zillow got out, not because the market's going to get bad, because they just had a bad algorithm and it messed them up. They'll eventually jump back in. But OfferPad and Open Door are the 2 big players, and there's hundreds of these other guys out there. So they buy your home with a 3% transaction fee now, and they turn it within 90 days, and they might make 2 to 3%, which is a good, healthy margin in a real estate transaction.
Oh, yeah.
Well, what happens if real estate goes flat? These guys are going to have to change their model, right?
Well, they're stuck holding the bag.
Well, the only thing they're going to be able to change are 2 things. They're either going to give you a lower price for your home and tout the convenience of them buying it, or they're going to have to raise their fees. So if house prices are flat and they want to get into this flipping business, they're going to have to charge a 10% transaction fee in order to make any money. And now that realtor that's out there charging 5 is going to look like the bargain of the day.
Well, that's interesting. I didn't think about that.
So, that's one scenario that could happen. Get even a supply chain back to normal. What incentive would big corps have to lower prices? They've had taste of huge book profits this year. Why would they let that go? That's just a basic supply and demand. I agree with your dad when I was listening to the show on Saturday that, eventually we're going to have a glut of supply.
Yeah. And then it happens all the time. There's you see it through the supply chain. There's it's a cyclical thing. So microchips are a perfect example. Right now they're sky high. Eventually things will normalize and there'll be too much and it'll fall. What was that gentleman's question again? I think there was something interesting here. What incentive would big corporations have to lower prices? Well, because when you lower prices, you
get more sales.
Yeah. What's Bezos's quote? Your margins are my opportunity. and so to undercut as much as you possibly can. And a lot of it is necessity. Yeah, prices will probably stay where they are for now, but we just don't want there's a certain point where people are just going to go, forget it.
Yeah, you can only hold your prices there so long as the consumer is willing to pay that. And if you have
Exactly.
another competitor that comes in here, you can go ahead and try to be the top dog as long as you want, but supply and demand is going to bring it down. And one of my sons had a good point. He goes, he says, I want to buy this graphics card. I want to upgrade my computer.
Yeah.
He's really, really good at that stuff. And he goes, and I can't get the graphics card because of the chip shortage. He goes, the problem is by the time that this supply chain issue goes away, there's going to be a newer chip.
Yeah.
So I'm not even going to want that graphics card. So what's
Plus,
going to happen to the price of that graphics card that he wants this year when next year there's a better chip?
that's the
It's gonna
thing.
go down.
There's it becomes obsolete really quickly in technology, and then you don't have, like you said, there's just no incentive when you know something is good, something better is right around the corner. That's why, I again, it's amazing to me that there's lines at our ports that we can't get the inventory that we need. That to me is ridiculous.
Well, I was thinking this morning because I used to be in the distribution business and food, right? And for some reason, I was thinking this morning, probably because, I mean, I can't go out. I got to stay home for a little bit. I mean, how do these guys run their business when so in the bread business, you get the bread shipped to the warehouse, the route guy takes the bread off the racks, puts it in his truck, and off he goes. Well, if there's 5 of them in that warehouse that are sick, and they're going to be out for at least 5 days, how's the bread get to the store? You don't have 5 people on standby.
No.
You only have so many supervisors, usually one supervisor for every 10 guys. And so if 5 guys are out, so where's it go? How do they, that's why there's a shortage. So even the problems that they have in the docks is that, there's a shipping company and, 60 guys are sick. I know in Washington State, there was a warehouse in Southern Washington. I was talking to a friend of mine that runs a store up there in a very remote area. The governor closed the warehouse because there were 60 people with COVID. And he says, we got to do something. We got to have food. So they ended up shipping them food from California until the warehouse opened up again.
You're kidding.
No.
They shipped the food from California.
Yeah.
They couldn't get it anywhere closer?
No. There weren't people. And so when you look at these loading docks like Long Beach, okay, so there's the guys that are sitting out there in the water, they get these boats, go out and take them, put them in a hotel and wait until their ship can be unloaded. So the longshoremen that operate the equipment to pull the containers off the ships, they got 10 people that are out because of COVID. The trucks that come to pick them up, they're not fully staffed. Plus, I think California's got some weird rule that you have to be in the union. You can't be an independent truck driver. So that lowers your supply of truck drivers to come in and get them. That's why DeSantis in Florida is saying, go through the Panama Canal. I'll even pay the bill, which is interesting because that's $450,000.
Wow. Is it really per?
Yes.
What is it per? Jeez.
Yeah, that ship going through $450,000. So
I wonder does California pay extra unemployment benefits contribute to the shortage? It pays well, but
I don't think so, simply because longshoremen make a bucket load of money.
Oh yeah.
So
get a sweet union job.
Yeah, those guys are killing it, Jerry. I think the longshoremen that I know that in Seattle and Port Angeles, unemployment wouldn't even come close to what they were getting. And the nice thing is their contracts pay them when they don't even have to go in. So sometimes a ship comes in or is supposed to come in and you're scheduled to work that day, but the ship doesn't come in, you're still paid. So
I'm all fine. That's the problem is sometimes you wish, all right, the unions will be a little more flexible in times like this, but you also have a national truck driver shortage.
Yeah, because the average age of the truck driver is something like 50.
You have to be 21 to drive a truck.
Yeah.
Why?
Yeah.
Why not 18? And then right out of high school, you got a $50,000, $60,000 a year job.
Yeah. Yeah.
you're probably not going to start there. But, it
Well, I
I
spoke
just
to
don't
you a
understand it.
few weeks ago, actually a couple months ago, and you were saying that you were seeing a trend where some of your clients, your wealthier clients that had a lot of properties, were starting to move some of them because they were worried about future capital gains hikes.
Yeah,
Is that continuing or backing off? Because it doesn't look like some of this legislation is going to go through.
it's election season. It's a it they're not going to talk about it. I think it's dead in the water this year. Um, then again, who knows? There's been some pretty. Right now, it looks, obviously the incumbent usually gets creamed in the midterms. It all depends on the schools. I think it's how the suburban, especially suburban women, uh, how they feel. I think really that's the key. So we're going to have to see what they do with the schools. I think that's where it all lies. I know that sounds overly simplistic, but when you start messing with people's kids, um, it becomes a different animal.
Yeah, then well, I know that there was a period there where people were worried about capital gains going up, and so they wanted to go ahead and clip their profits now and pay the lower rate versus the higher. But that's probably not continuing at the rate that it was. But I'll tell you what's really continuing now is, and I'm going to show you the number here. I just looked it up, and this is um, that's the number of homes we have on the market there, Sam. 5,506. That's and people are not listing. I
Can
think
you
it.
see what they bought it for versus what the asking price is?
Yes, there is a chart on the Crawford report that I use, and it's called um, closings over list price.
Because
And
I'd love to see the amount of potential capital gains.
well, on average, that really won't show you what they paid for it. It what it shows you, it says on an average $300,000 to $400,000 house, they're paying $10,000 over list, but it's not showing me the average list price or what type of potential capital gains are out there. We are still running into 47% of all of our homes are going for above list price on an average of $10,000. The situation that you see when you have a number that low is that our sales are not that huge. So if you look at the yellow line, these are contracts. Okay. The blue line is inventory. So the inventory finally took its little turn here, and while sales are trying to catch up. But if you look at this and people are telling you, well, sales are crazy. Well, they're really not. It's going between 3,200 and 4,000 every 7 days. And that's a at average or below rate. But because so many of the buyers are chasing those few listings, it seems like it's crazy. So when you go out and show a home, let's say I'm taking you out and I'm going to show you a home in Gilbert, and you've got this criteria. I
Yeah.
want 3 bedroom, 2 bath home in this price range. I guarantee you, if we look at 5 homes, we're going to see the same 5 buyers with their realtor going to those same homes. You're just like, hello, yeah, nice to see you again. You're all bumping into each other.
How do you
And
compete against that?
you throw an offer out and see if it sticks. It's tough because I mean I had one in Phoenix. I thought for sure we were going to get it because um, nobody, they just lowered the price. It was really a weird psychology in house pricing for a minute. It's like they were asking. I think I'm just going to make up the numbers right now, but I think they were
Sure.
asking 489, and they weren't getting any offers. They lowered it to 479. We went in. My client liked it. They said they had one offer that was below list, so we offered them at list. And then he said, no, bump it up a little bit. So we bumped it up a little bit. Got up in the morning and checked. They had 2 more offers that beat us. It ended up going for 484. Well, here's the weird part. It wasn't moving at 489. Nobody came in and offered him 484.
So there
Once
was
they lowered it to 479, boom, everybody bid it up to 484.
a
So I guess the message in that is if you see a home that you think's overpriced, then and it is, then go ahead and write the lower offer and have your agent tell a compelling story. But the problem is in that lower price range below 400,000, you're competing against cash. So even when you come in with good terms and everything, a cash guy comes in, boom,
I'm
takes you
already
out.
writing letters to. There's a neighborhood about a mile down the road, and they're houses that I could spend the rest of my life in.
Yeah.
And I bought this house for $450. I didn't, I still have mortgage on it, but it's now worth, according to Zillow, so I don't know how accurate it is. I got it's now saying it's worth 700 something.
Holy cow!
And I'm thinking, no, but there's probably something. I'll probably make some money. I want to move. Yeah, that's the problem. Is where do you go? I don't think the houses are worth. Over there they're saying they're worth $1 million. I'd say 6.
Yeah, California. I'm going to be interviewing a gentleman tomorrow. It's Jeb Smith. He's in Huntington Beach. I want to talk to him about how those homes are being purchased. Like, because the average price out there is like $1 million. And so, what would you recommend to somebody in their 30s? What's the best way to save for a down payment, and where should they park their money?
Cash. You got it. If you have a timeline, so you have to. Some planning has to go into it. Generally, I don't know. Because interest rates are rising, I don't know if you're going to want a higher down payment to get a lower rate. I don't know if that does it. And if you're a first-time home buyer, I think you're pretty much SOL.
Unfortunately, yes.
Yeah, you want to keep it. You want to keep it in cash, because you might see an offer where you go, you know what? Let's try anyway. We only have 15%. We have to pay that stupid what's it called?
Private mortgage insurance.
Yeah. You got to pay that until the home equity goes up a little bit. You get your house appraised and it goes away. Keep it in cash. If you need it within a year, cash. And it sucks because you're going broke safely in the bank. But there's really no alternative without a lot of risk right now. And so that's the unfortunate part. Hopefully, though, with these interest rates, we'll start to see a little bit more of a competitive yield or something that doesn't suck, where you get a penny on your savings.
Let me ask you my final question. What keeps you up at night? As far as the economy and finances.
Oh, I was going to say The Exorcist.
Linda Blair.
Student loan debt. You think Evergrande is bad. You think the home mortgage crisis in 2008 was bad. Student loan debt. They have got to let that be discharged via bankruptcy. That's it. You don't forgive it. You got to go through the process. You got to get creamed. You took out those loans, but everybody needs to play a part. There's nobody in an avalanche feels no single snowflake feels they're responsible. But that's got to be fixed. That's got to be taken care of. It's over $2 trillion. You can't have the majority of young people $2 trillion in debt.
Yeah, the sad part is you can see, and I can't remember who said this, and he said, it was Elon Musk. He was quoted as saying, when someone right out of high school can get $100,000 loan for college, but can't get a $10,000 small business loan, that says everything that's wrong with the economy.
Yeah. Yeah. Or they can't even get a loan for a house.
Yeah.
It's you can go die for your country, do all that good stuff. It's honestly atrocious too, because you know how much these endowments have? These school endowments, they're pretty much tax-free hedge funds. There's hundreds of billions of dollars at these hedge funds or these endowments. And Why aren't they helping the kids? Why? Yeah. Why can't you go and get? That's the thing. We need more truck drivers. We need people, electricians. That's good work. You're going to make a killing right out of the gate. So learning a trade, I'm excited. I hope I don't have to pay for college for my kids. I'd be totally happy with them.
Oh, yeah. A comedian had a joke about not being able to help his kids pay their student loans, but he still owned on his own because he still owned on his own.
He still had his own student. Oh, I my I don't really feel. My wife had student loans, 6 figures, right, for music school, and I'm thinking, I'm not going to pay this. So we basically protected all of our assets, and we have it now where we have to title our assets differently, everything to protect it from creditors. I'm not going to pay those SOBs one dime. If you're stupid enough to loan $250,000 to a art student, I'm not paying you. You made.
I look at I drive by the college, I drive by ASU, and I see all these really expensive rentals,
Yeah.
luxury housing, and I can't put the term college student luxury housing in the same sentence. But what I see, the difference now between when I was scrambling to go to college is that the money is so easy to get that the universities don't have to dial back on their spending. I
No.
went up and toured Northern Arizona University in Flagstaff. Their gym was unlike anything I'd ever seen. Their sidewalks were heated to melt the snow. And I was with my brother-in-law, and I said, they have no limit to their spending because the money just keeps coming in from these subsidized loans. And it's just like the spigot is never going to be turned off. It's going to end quickly when it does, but there's just too much easy money. So they have no responsibility to cut spending.
Well, there's no fear of failure because you can't go bankrupt. You can't discharge those loans via bankruptcy. It's the same thing that's happening in China with Evergrande. There's no fear of death because everyone thinks they're protected. Everyone thinks, oh, the government's going to step in. Everyone thinks, all the lenders think, oh, well, you can't go bankrupt. So we'll just, whatever. You just
Keep
pay
going.
us whatever you can.
Well, I think there's a possibility. I know the student loans are a big deal. And I don't, on my channel, I can tell you definitively where the trend is for pricing 3 to 6 months out. And for right now, in the first quarter, real estate's going to go up. There's no escaping it. You can't have 3,200 people buying and only 5,500 homes available and expect prices to go down. The number of homes on the market has to spike exponentially to where it shocks people. Now, the challenge is when it starts to get to what we're going to call a balanced market, the news is going to be bad because a balanced market is 27,000 homes available. When that number get hit, the headlines are going to be home inventory has tripled. Buyers have backed off. Too many homes available. And so now the buyers are not going to recognize an opportunity of a balanced market. We're not going to get to a balanced market in 2022.
When was the last time we had that kind of inventory?
2012 to 14, somewhere in that ballpark.
Jeez.
So I think there's also the possibility that this trend could continue for the next 5 years as long as easy money is out there. And I don't know, I'm not in your field, so I can't look it out. There's the strong possibility that this year could be really good if government gets out of the way.
You mean in the what's it called? By government getting out of the way, you're referring to the I forget what it's called.
Build Back Better spending plans.
Yeah, God, don't they have the creepiest names for these things?
Chasing, and and I was critical of some of the things that Trump was trying to put forward too. So, like for example, I never understood why he gave the green light to the rental moratorium, especially being a professional landlord.
Yeah, I think he was probably just like, yeah, you know what, screw it. Yeah. At the same time, it's interesting because we've never seen that kind of in 2008, the problem was when we did that TARP program, We spent too much time arguing about who was going to get the money. And this time we just turned a fire hose on the helicopter money, except we took a fire hose up there and we started, so it was a fire hose and a helicopter. And it's interesting to see that so far this looked like it worked. And that's both dangerous because at a hint of any sign of trouble, they're going to start throwing stimulus out there. I 3 to 5 years though out, I think inflation will tamp down. I think real estate though in Arizona remains elevated for the foreseeable future. I just don't see, it's very hard to build new place. They're building apartments everywhere, but I want a home.
You're still a year and a half out. I think a challenge for Arizona though is all that building's going on in the fringes. You got to go way out to Surprise, Buckeye, or Santan.
You want to be inside the loop 101.
Yeah,
and you can't find it. It's jam packed.
One of the things that was floated by Mitt Romney during the collapse of 2008 was mark to market. Did you hear about that? What that is?
I remember it. I didn't pay much attention to it because I wasn't very excited about. Oh boy.
Well, basically, you talk about options, like you said, they keep throwing stimulus out. And what he was saying was, first of all, let the bankruptcies happen. That's natural, course of our financial system, the way it's set up. He goes, or do mark to market. And I'm like, what the hell's mark to market? So let's say I bought a house for $350,000 and now it's worth $275,000. He's saying rewrite everybody's loan. So in other words, here's my appraisal, $275,000. Boom, here's your new note.
Yeah.
Let these guys eat it. They were the ones lending the money out when they saw the data. So let them eat it.
Yeah. There's got to be risks. So
mark to market. So everybody's house price goes down and they just come in and they go rewrite. And I think that if we were to have another major downfall, that would get a lot more attention than it did back in 2008.
I think so too. I think it's actually a pretty wonderful idea. Are they lifting that rent moratorium anytime soon, or do they extend it again?
It's kind of state by state. It's not going on. States have the ability to extend it.
So I thought it was a federal.
Well, it started out as federal, and the federal it's gone. It's expired. But California kept theirs going, and
of course,
so we haven't. And guess what? It has not caused a wave of listings coming up from people trying to, sell what they currently had as rental homes. It didn't happen. Just like the forbearances never caused a wave of foreclosures, even though you would see headlines that say foreclosures up 67%. Well, total foreclosures during that headline was 149. So yeah, you might be up 67%, but you're comparing it to a year where foreclosures weren't allowed.
Yeah.
2020.
You got the base effect.
Yeah.
And it's how to lie with statistics. It's really, it's so disingenuous that they do that kind of stuff too. And that's why with clients who are worried about investing, in this market, they're, it's at an all-time high or close to, I say just number one, if you got to get in, time in the market is the most valuable thing you can have. If you're worried about it, average in over a period of, weeks, months, whatever you're comfortable with, but get in the market, do what you're going to do. And the same thing goes with a house. Look, if you need a house, you need a house. Obviously you don't want to overpay, but you need a house, and it's by far the greatest way to build wealth. It's the greatest wealth creator in America. Really, I mean, it's the biggest asset that most people ever make, or biggest asset purchase that most people ever make.
And it's a tough one. It's stressful. As a buyer, there's many sleepless nights. I wish it was easier. We try to walk you through the minefield of regulation as a real estate agent, and it's always the inspection period. You negotiate the price and you get that, and everybody thinks, okay, we're good. Well, once that inspection comes out, the knives come out. Every time. It can be the simplest ceiling fan doesn't work. Oh my God.
Oh, that's $6,000 off.
Yeah, yeah.
because I need to replace the roof now.
Yeah, yeah, yeah. So that's it. Well, Sam, I'm glad you're feeling better. I'm glad you're back up and running. It's great to see you again. And
Absolutely, I'm
remind
getting
everybody,
back in the groove.
you guys have a radio show on 55 KFYI on Saturdays at 11 o'clock.
That's correct, 11 to 1. So
11
I
to
do the
1.
noon hour. My dad does the 11 to 12, and so he's the opener. I'm the closer and closing act. Save the best for
And
last.
if you can't catch it live, it's on your website at
It
Degreen.
is
It's Degreen.com or DegreenWealthManagement.com.
Degreen.com.
Degreen.com.
DGREEN.com. And we were bought out by a company called Allworth Financial. And they're awesome. They let us keep our name.
Nice.
Which we're the only one that let do that. But they're just a wonderful company. Excited to work for them. And I think you'll be hearing a lot about them. They're trying to expand into the Phoenix market. I think it's a great opportunity. But yeah, there's a lot of changes going on. Emmett, mergers and acquisitions. Are you kidding me? You know how many clients we've had sell their business in the last, we've probably seen $60 million in people selling their businesses. It's unbelievable. We just had a guy sell his pet hotel for $7 million.
Wow.
I'm like, this is the guy, so happy for him. It's awesome because you know how much work they put into it.
Yeah.
You meet them years earlier, and people are cashing out though. So there's a lot of opportunity out there. There really is. There's a lot of opportunity. All of this, there's always going to be something out in the market, but don't let us.
Cool. Well, let's catch up again next month. Okay.
Absolutely. Let's do it.
Good to see you. Take care.
Yep. You as well.